if you look at GST itself, the GST is what everyone refers to as a destination-based consumption tax. So in simple language, what it means is the tax should be attracted where the goods or the services are consumed. So if I sell a good to a consumer in state A, it is assumed that the goods will be consumed in state A. Therefore, the destination or the consumption of such goods is in state A. Tax should be attracted in state A. If goods are sold from state A to state B, then the destination and consumption is supposed to be in state B. Tax should be levied in state B. The mechanism is that state A will collect the tax and then transmit it to state B. So that is why we refer to GST as a destination based consumption tax. Now let us look at how GST is defined per se. The definition of GST is any tax on supply of goods or services or both except alcoholic liquor for human consumption. So three important things we have to understand. One, it is on the event of supply. It is on all goods and services except alcoholic liquor for human consumption, which continues to remain under the purview of your state excise duty or the state legislatures. Destination based consumption tax. So this is something which we had already discussed previously. Now let's move on to the third part of it. It is a value added tax and there is going to be seamless credit. A lot of you would have heard about it in the papers or in the announcements which the government is making, saying the entirety of the basis of GST is to prevent the cascading effect of taxes. It is a tax only on value addition. So what do we mean by this? Will any of you be able to help me with that?
You don't get double taxed. There's one single tax levied and you don't get taxed over and over again at every transaction.
Yeah, that is correct. So in fact, if we look at the history, when we moved from a sales tax to a VAT regime itself in the states, essentially what happened is I would have to be taxed only on the value addition. Let us say that I buy goods for 100 rupees. I undertake some manufacturing activity and I sell the same goods at 200 rupees thereafter. On my input, say I would have paid 10 rupees tax, and my output at a percentage of 10%, I pay rupees 20 tax. So what they are saying is your effective tax should be 20 minus 10, 10. So that should be the outflow from your pocket. Now that 10, if I see, is 10% of rupees 100, which is a value addition in my hands. So what they have done is that they want to tax you on the value addition. The way they have done it is by giving you credit for all tax paid at a prior stage. So let us say it goes through 3-4 chains before it reaches the eventual customer. At all the parts of the chain, that is point number 1, point 2, point 3 and point 4, you will be entitled to full credit and you will be entitled to utilize that credit against the tax payable at every stage. Therefore, that is the concept of a value added tax, where you are taxed only on the value addition. Full credit should be available to you at the earlier stage, and this will prevent the concept of what is referred to as also double taxation. So this is the basic concept of GST. Now, if you look at the previous taxes which are there are various taxes at various stages. Excise duty under the Central Excise Act. You had various cesses like education cess, secondary education cess, surcharges, additional excise duty. On medicinal and toilet preparations, you had something, service tax under the Finance Act. Now, all that will be subsumed and you will have a single tax known as the Central Goods and Services Tax. So, you don't need to look at any of these duties, you only need to see the CGST from 1/7/2017. That will happen at the central level. Post that, now let us see what will happen at the state level. At the state level, you have your entertainment tax, you have taxes on luxuries, betting, gambling, but the most two important taxes are your VAT or entry tax. CST will go to the central taxes, shouldn't be the state taxes. All this will get subsumed into your state taxes or what will be referred to as your state level GST. So going forward, you won't have n number of taxes which you need to look at. You will only need to look at whether it's a SGST plus CGST or whether there's a levy of IGST. Now let us just take a transaction in today's world. You are a manufacturer, you pay excise duty. Over and above excise duty, when you sell it, you will have to pay VAT. In certain states, where the goods enter the state either on your raw material or when you're selling it on an interstate basis, you will have to pay an entry tax. You'll have to pay a CST. And if there are some associated services, transportation related services also which you provide, or let us say that you sell goods and provide some add-on services, you will have to pay a service tax also. So there are a multitude of taxes in today's regime. So any businessman who does business has to be aware of the various applicable taxes. What they are trying to do under the GST regime is to condense all these different taxes into 2-3 levies: SGST, State Goods and Services Tax, CGST, Central Goods and Services Tax, and IGST, which is an Integrated Goods and Services Tax. The provisions are the same across CGST and SGST. Most of the provisions are the same for IGST, except for certain provisions which are different. So today you will probably need to look only at 2 legislations, and they are also trying to simplify the nature of taxes which are payable. So this is what will happen under the GST regime. Now India, like I told you, is going to follow what is known as a dual GST regime. The reason I gave you a background of the constitutional scheme of India is India always says India is a federal state. India is a union of states. That means there is one central government and various state governments and union territories. Historically, the taxing powers have always been divided between the center and the states, and that needed to be continued in some form or the other. So that is why even in the evolution of GST, you have a GST levied by the center and a GST levied by the state. Digressing a bit and going into the economic concept. Now, why are taxes collected? Taxes are collected so that the state can fund their expenditure. So the state government, to fund its expenditure and to run welfare schemes, needs money. That money comes from taxes. So previously it was coming from all the various taxes. Just go to the previous slide. All these taxes which was referred to. Now, all that will now become an SGST. The central government was getting money from all those various taxes previously. Now that will become a CGST. So that is how the money will come to the state government, and that in turn will be used for the expenditure of the state government. So that is why you have a dual GST. CGST to account for the center's needs and SGST to account for the state government's needs. Now if you look at a dual GST, like I told you, the same transaction, if it's a within the state transaction, it will attract a CGST plus an SGST or a UTGST. UTGST is, let's say the transaction happens in a union territory instead of happening in a state. So instead of a SGST, it will just be called a UTGST. All provisions will remain the same. The center is the CGST, state is GST, and union territory is the UTGST. The taxable event is the supply of goods or services. They are separate enactments, but like I told you, the provisions will mirror each other. So you will probably need to look only at 2 legislations. Now we need to first understand what is supply, because every transaction of supply will attract tax. Now supply has been defined as any transfer, exchange, barter, etc. for consideration. Certain cases, even without consideration, a transaction is defined to be a supply. So what it will entail for me going forward is I will need to forget about the concept of manufacture. I will need to forget about the concept of sale. If there is a supply as defined under GST law, there will be a liability to pay GST. So today when I manufacture goods, on removal I will have to pay excise duty. Tomorrow, I manufacture goods and I supply it to a third person. On that event of supply, I will be liable to pay. The liability is not attracted when I manufacture. The liability is attracted when I supply the goods. Now, these are the different nature of transactions which can normally happen. And let us look at how the GST will be levied. One is an intra-state transaction. That means, let us say within Tamil Nadu. Both the seller and the buyer are within Tamil Nadu. In that case, you will have a levy of CGST plus SGST. Let us say it's an interstate transaction where the seller is in Tamil Nadu, the buyer is in Karnataka. You will have what is called an IGST. Today, what you are paying as CST will be referred to as an IGST. Then you have a transaction of import into India. Today, when you import, you pay a basic customs duty and you pay what is referred to as CVD or SAD. There will no longer be any CVD or SAD. You will pay a basic customs duty and you will pay a levy equivalent to the IGST. So if your IGST is 18%, you will pay a levy equivalent to IGST. Now that will be fully creditable. Exports, the principle has always been that exports should be without tax. Therefore, if it's an export transaction, no tax will be applicable. Exports under GST will be referred to as what is known as zero rated supplies. I will come to the concept of zero rated supplies shortly. Developers or an SEZ, which is a special economic zone, are also zero rated. There is also another provision which says when the supply is in territorial waters, that shall be deemed to be a supply in the state which is closest to that territorial water. This may not be very important for most of you over here, but in case of certain companies which supply goods or do drilling activities in territorial waters which is part of India, this is quite important because previously transactions which were not taxable will now become taxable under the GST. More a pictorial representation of what I had previously explained. So, if I just go over here, this is GST, state A. If it's in the same state, intrastate, between two states, interstate. Same thing in the case of imports, BCD plus levy equivalent to IGST. If it's an import of service, only IGST. Interstate transaction is going to be what is referred to as an IGST. Concepts which today I knew. Someone might have said, I only known excise duty for the last 20 years. I'm in the manufacturing sector. I have known sales tax. I have only known VAT. All those different concepts will become irrelevant under the GST regime. What I will now need to know is whether it's a supply of goods and or services. So I need to forget about manufacture, provision, sale. I will need to understand the transaction of supply of goods or services going forward.